Good morning. Wow. Good morning. This is Wayne Bilal with another Smart Profit Maximizing Moment. Today we're going to talk about what's been in the news, and almost everybody and their uncle is what this is what they're talking about. These are the phone calls I've been getting since like April 1st, and it's picked up against this week, which is the PPP loans. All right. It's a couple things. One, getting a loan. We talked about that. Okay, but the more important thing is making it forgivable. And there's a formula that I've had two different banks send me what the SBA kind of formatted. So I want to discuss that today because you might not want to sign the documents. There might be a better way to do it, especially if you don't think you can get it all forgiven. Now, if you need the cash, forgiven or not, this might be the best way to go. But you also might want to explore yesterday what I talked about, the payroll tax credit. All right, forgot what it's called, so my brain stopped there for a minute. But to be honest, you got the PPP loan, you sign the paperwork, you get it funded into your bank. At that point, an 8-week clock starts. Okay. Now you need to read your documents, your loan documents. They're going to come to you from the bank. They're going to look like a loan. Okay. They're going to show usually 18 monthly payments starting 6 months from now, at a 1% interest rate. So that's basically what happened. The amount that's not forgiven turns into a loan of 18 monthly payments starting 6 months from the time you're funded. All right. So why? Why 6 months? Well, that's literally how much time you have to get it forgiven. I personally would read your documents real close, make sure the bank doesn't have a different time. But yeah, I think it's all covered by law, so I don't think they can. But I would personally say, all right, 8 weeks is 2 months. I would say try to get your forgiven in maybe 3 months, 4 months, the latest. Don't procrastinate. I mean, if you miss the deadline, you miss the deadline. End of discussion. All right. Because the bank not only has to get it, approve it, they got to review everything you have, but they're going to need to send it into the SBA and say, all right, we've agreed this is forgiven. So the onus is on the bank. So stay in contact with your bank. All right. So what happens? I mean, we're not going to talk about, there's been a real confusion over the 2.5 months versus the 8 weeks. I really don't know what the lawmakers had in mind, but my thought process is, you take your payroll divided by 12, multiply times 2.5. You come up with an amount going to be higher than if you take 8 weeks, which is roughly 2 months of payroll. My guess is that the fact that they let you take into account rent and utilities as items that you can use to get forgiven, up to 25% of the loan. 75% of the loan needs to be for payroll. Now, understand, the thing is called not the PPP, it's the Payroll Protection Program. So the goal of this thing is to protect your payroll. So there's a couple, that becomes more obvious as we look at what they are going to require in order for you to get it forgiven. Okay, so first of all, starting at the covered period, which is 8 weeks following the loan origination. So really, that's the date you really need to know. The date the loan was signed, not necessarily the date you got the money. So that's why on the clients I'm helping, and I got at least 50 right now that I'm helping, I'm requesting the loan document so I can see exactly what the date is that's on the loan document, because that triggers an 8-week period. During that 8-week period, I first add up my salaries, wages, commission, vacation, and sick pay. All right. Now I'm holding in here the paper that I got from 2 different banks now that came from the SBA. So this is probably pretty straightforward. This is the format that we're going to use. All right. So first thing I start with is my salaries, wages, commissions, vacation, sick pay. I add my group and health insurance, including shareholder health insurance. Okay. There was some question about that. Retirement benefit cost. All right, this one's confusing me a little bit. I'm going to have to get some more answers to it. If I'm doing a 401k, okay, the match makes sense, a couple of months worth of matches. But what if I do a large, I have a couple clients that do a SEP at the end of the year in October, or do a defined benefit plan, $300,000 at the end of the year. Is it prorated what I'm planning on doing, or do I do a part of it during this time period? Not sure. We're going to have to get a little bit more information. My guess is I probably ought to make the check, all right, or at least a partial check. State and local taxes on employee compensation, in other words, unemployment taxes. In Texas, the Texas Workforce Commission. All right. This is the tentative forgivable payroll cost before required reductions. Let's come back to that a minute, okay? Other things that can be added to it are non-payroll costs incurred during the 8-week period, which are rent, utilities, and interest on covered mortgages on real or personal property. Okay, that answered one of my questions. No, it can't be on equipment rent. So we're talking about buildings, all right? Your place of business. So if you rent it, it's easy. Stick in your rent. I don't think you can get away with paying 6 months worth of rent. Come on, pigs get fat, hogs get slaughtered. Let's not get crazy, okay? Do your normal 2 months worth of rent in this time period, okay? My understanding is, and I'm looking in more of what, this is the worksheet, backup is going to be a different animal. I'm going to have to send in payroll logs. May even have to send in the actual canceled checks. I'm going to have to send in utility bills and the canceled checks or the proof of payment. I'm going to have to send in the rent. And to be honest, I would not be, and this was the rent that was in place before February 15th. So I would not be surprised if I need the rent document, the lease agreement. We'll find out more as we go. And each bank may have a different requirement there for what kind of backup is required. All right. So that will get me my tentative forgivable non-payroll cost before required reductions. So I take in my tentative, I do a calculation of how much is the 25%, make sure that only 75% is payroll. And then we get to an interesting part, which is required reductions in loan forgiveness. Not many people are covering this, and this is kind of important. And the key to this is to remember what the goal of this program is. It's in the name, Payroll Protection Program. Boom. It's designed to protect payroll and keep them employed rather than unemployed. All right. So the goal of this program is to make sure that they're twofold. One, people aren't on unemployment, but when you finally can open, you have your payroll in place rather than having to go hire people. So the first thing they're going to do is they're going to compare the number of employees. We're going to take your monthly average full-time equivalent, and that's an FTE, full-time equivalent employees for the covered period, the 8 weeks following the origination of the covered loan. Now, if somebody's full-time, they're full-time. If they're part-time, you basically take their hours, divide it what is normally full-time. All right, if full-time is 40 hours, and I got 2 people that are working 20 hours each, they equal 1 full-time equivalent employee. All right. Then they're lesser of the borrower's choice, and I get a choice here. Monthly average full-time equivalent for the period of February 15th to June 30th. Not sure, I guess if you were open and you've hired more employees, that's the one I'm going to use. Monthly average full-time equivalent for the period from January 1st to February 29th, before all this crap hit and business took a nosedive, and before you were forced to close or whatever. And now what we're going to do is a percentage forgiveness reduction based on employee reduction. So we're going to basically, if you reduced employees, let's say you had 5 and now you got 4, you got a 20% reduction of what will be forgiven, okay? So then you have a compensation reduction, you basically look at what we're doing. Individual employee compensation reduction in excess of 25% compared to the most recent full quarter before original loan. So there's more into this. I don't want to get into craziness, but because it's a little bit more detail than that. I'm just telling you, this is your job. The banks have told me that they're in the business of giving loans, which is what this is. It was really pretty smart of the government to get, look, if you've never gotten a loan before, this may seem like a big pain in the butt to you, but if you've ever gotten a loan before, this is definitely a streamlined process, okay? And like I told my clients at the beginning, it's going to be a lot easier to get this loan than any loan you've ever seen, but it's not going to be that easy to get it forgiven. All right, because you're going to have to prove that you use the funds for what you were supposed to have used them for. Let's be honest, you made some certifications and stated some things were true to the bank, including that you were going to use it for this program. So if you take the car, go to Las Vegas and have a vacation and then fire all your employees, yeah, it turns into a loan, but it also might be considered, it is considered fraud. I anticipate too, get your act together, make sure you have your backup, because some of these are going to be audited, no doubt about it, okay? Not sure who's going to do the audit. Is it going to be the IRS? It's got to be. The SBA doesn't have auditors. So most likely it's going to be the IRS. All right. Get your ducks in a row. Make sure you know what's going on here. I'll be honest with you. You're welcome to try to do it yourself. If you make a mistake, it's going to cost you. So I would recommend getting somebody to help you. Anywhere from $1,000 to $2,500 is what I'm seeing as the fees, depending on the size of the company and how much work is required. But if I'm looking at a 30, 20, 30, 50, $100,000, $700,000 loan, that's worth it to get free money that's forgiven and non-taxable. Hey, I wanted to give you this. Call your bank if you got a PPP program, if you got a PPP loan, and get a copy of how to calculate the forgiveness amount. If you feel comfortable doing it, go ahead. Hey, until next time, this is Wayne Bilal saying, let's make this our most profitable year ever. Thank you very much.